Hello, my name is Akhtar Hussain Sheikh and I'm making this video for an academy. Today's my topic is gross value added. I will discuss what is gross value added, what are the different costs at which we calculate this gross value added. Like we have factor cost, we have basic price, we have market price on which we calculate this gross value added. First of all, let's understand what is the meaning of this word gross value added. So, gross in simplest, if we see that the gross value added gives us an idea about how much value has been added maybe to a product or a raw material by a producer, how much actual value has been made. It shows us how much the total function or total value which has been added by a producer. Simple example, we'll take it. Say for example, we have cotton, and the cost of this cotton from a raw material is rupees 500, and we are making t-shirts out of this. And this cotton as a raw material goes to a factory which will change its shape and do some processing in it, and we are making some t-shirts. And the value of, say hypothetically, we are making only one t-shirt and the value of that t-shirt is rupees 900. So the input value is 500, the output value is 900. The difference, that is output value minus input value, is our 400 rupees. And this is the concept of value added. That means we have added the value to this product. And what is this value? This value will take the shape of maybe a t-shirt. We have given it a shape of t-shirt. We have added some color. We have done some stitching and everything. That means we have changed the physical properties of this product and made it more usable. The word more usable shows that we have put some more addition in terms of value into it. So this is your gross value added. Now, this gross value added is actually calculated at three costs. One, we have factor cost, we have basic price, and we have market price. Now, what is factor cost? Factor cost is the total cost of manufacturing. Total cost of manufacturing a product. Say for example, the total cost in any firm is actually in four types. It is also known as the cost of production. Cost of production, which is rent, which is wage, which is interest, which we put on capital, and profit. This is actual cost of production. So what is factor cost now? It is the total value which, or is the total cost that is incurred by a company or by a firm. In economic terms we call it firm, to produce a good and services. Say for example, the total cost of manufacturing that t-shirt is, say for example, 900 rupees, and this 900 rupees is known as gross value added at factor cost. Since my time given is very small, 10 minutes and I will try to wrap up it on time. Now, if you have to find the basic price, this basic price is always at factor cost plus net production tax. What is net production tax here? That the government will ask that firm that you have to pay some taxes to us, and those taxes are known as production taxes. And these production taxes are to be paid whether you make any product or not. That is, these are independent of volume. Independent of volume. Say for example, we are making t-shirts. Whether you make any t-shirt or you make thousands of t-shirts, you make 0 t-shirt, you have to pay some taxes to the government. Those are known as production taxes. And say for example, you have a property tax, you have some stamp duties which you have to pay to the government regardless of your production process, whether you are making something or you are not making something. And sometimes government gives you the subsidies which you have to subtract, and those subsidies are known as production subsidies. So where factor cost plus what is net production tax now? Your net production tax should look something like this. Production tax minus production subsidy. And this will give you net production tax. Say for example, you give production tax of rupees, say for example, 200 rupees, and maybe the product subsidy you get is rupees 50. Now, what is your basic price? So your basic price is now factor cost that we calculated here is around 900 rupees. Now add production tax 200 minus 50. So 1050 is known as basic price, or it is also known as GVA at basic price. Then the third thing, which is market price. Remember I told you that these taxes are paid by the by the producer whether you make anything or not. But sometimes there are some taxes which are according to the product. The more you make product, the more taxes you pay, and those are known as, we have to find now market price, which is always equal to your basic price plus, remember its word is product taxes. So what are these product taxes? It is levied on the production. Actually it is levied on the number of goods you make. You make one product tax, hypothetically you pay one tax. You make 2, 3, 4, the number of taxes you make, the number of goods you make, this product taxes goes on increasing. It is always equal to basic price plus, this is net product tax. We have product tax minus product subsidy. For the purpose of remembering, the product tax in India is like GST. It is levied on the number of products you make. This production tax is not made on the goods and services. It is generally on your businesses. Whether you make something or not, you will have to pay production taxes. But your product taxes are those taxes which is levied on the number of goods and services. Can we say that it is dependent of the volume now? Say for example, our basic price was 1050, and hypothetically we are making only one t-shirt, and the government says to you that please give us, say for example, rupees 50 as GST. This will be the product tax. And government is giving some subsidies to promote the businesses, to encourage the businesses, and if it is given on particular product, on every product, those are known as product subsidies. This production subsidies is given on overall business. Say for example, on each cotton t-shirt we make, we are getting a 10 rupee of subsidy here. This is known as product subsidy. Now, what is your market price? Now, your market price is equal to your base price, that is 1050 plus 40, that is 1090 is your market value, or we can also call it, we can also call it GVA. Since we were discussing GVA, gross value added at market price is now rupees 1090. So the product which was worth of 500 rupees in earlier example is the factor cost, 900 is the factor cost. Okay, then we have basic price, it is 1050, and we add some product taxes and reduce some product subsidies, it gives us market price. This is your GVA at market price. It is also known as GDP at market price, which is 1090. I hope I have made it very clear. Thank you so much.